Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We have returning guest Peter Grandich. The first time we had Peter on the show, he made us realize that we were drastically underinvested in a metal that is very likely to do quite well over the next 5 to 10 years. And that metal is copper. Peter, thank you for coming back on the show.
Damn, I thought you were going to say uranium.
We already had uranium when we were talking to you. You made us
All
wonder,
right.
but copper for sure. It was like, well, we have BHP. Does that count? I think we need a little more. How you been?
Very good, Steve. Yourself?
Excellent, excellent. All right, let's start out a little bit macro here. What's your current view of the world economy and financial markets, and how does that play into your base case for commodities?
Okay, let's start with the good stuff and then with the bad stuff. The good stuff is, I'm sorry to say, the stock market and bonds are basically trading the way I suspected they would. Back in 2021, I just decided that America had entered its worst ever social, political, and economic environment. And as great as those markets were for almost 40 years, most of that would dissipate and disappear, and we would struggle to see anything close to markets like that for many years to come. That was my basically attitude. We had a very bad 2022. I didn't want to participate in a rally, but I talked about a rally for those who still found themselves entering this year way over invested in stocks and to some extent bonds, especially on the corporate side. I'm not too worried about treasuries and all, but I am still very worried about corporate. We can talk about that later if you want. So that markets and those markets have done well. We got to June, July where I thought we'd rally. I said, I think we've made the highs and the market is, weakening and interest rates. If you think about it, Steve, we were already, according to the Don't Worry, Be Happy crowd 12 or 18 months ago, supposed to be seeing easing, and we've gone a lot further than they thought we can in interest rates. And while we may not still climb a lot, I think it's going to be a lot longer before we see significantly lower interest rates. So in that environment, I'm good. In one metal, I've been very good. I got involved with uranium under 20. I said 75 then, and even my best friend said, "Are you crazy? It's under 20. How could you talk 75?" Well, today, as we speak, there's a 75 offer, which kind of, for the first time, even I wanted to send up a rocket, which kind of make me excited. And if I could stop there, Steve, I could have a great day. But unfortunately, I can't because as good as those markets were to me and as correct as I was, I've been horrific in the junior and regular mining share market. It's the worst junior resource market in the 40 years I've been in it. I've lost seven figures. I don't say that to brag or to be conceited, but to understand how much when I've lost more than I ever imagined as a young man I would ever have, both on paper and in actual losses. And while there still could be some more pain, starting to see just one or two bright lights just before we started. I said, today, for the first time, I saw gold down and I saw some of the shares actually going higher on volume, which kind of suggests that we need more than one day, but we may be finally reaching at least the bottom to this horrific bear market in mining shares, particularly as we go down the food chain in them.
Yeah. Okay. So what do you see? 6 months ago the bet was uranium. Now we're benefiting from that. What do you see as the time horizon? The next one. Where should we start studying now? I kind of look at it like whatever we got in uranium, that's kind of what we got, and then we'll start trimming on the way up. But what's the next commodity that you see coming? Is it gold? Is it copper?
So there was a great newsletter writer for years. If you've been around any time, you had to know him. He was colorful and he was also very good at what he did. His name was James Dines. And Jimmy used to say, think of the poor guy that invented preparation G. And of course, we all know it was preparation H that made it. And he would tie that into trying not to be a market timer, even though people came to him to be a market timer. My market timing has never been great. If anything, historically, Peter Grandich has been too early. But one thing I learned after 40 years, Steve, it's a whole lot better to be way too early than a day too late. So, as bad as it's been in the share end and has somewhat sideways overall, listen, Gold and silver, they're flat. They're 5% off or 5% higher this year. Copper's a little bit lower. The metals themselves hasn't been that bad, but the shares where I have focused on and where most people who are interested in metals also focus on, that's why they feel more depressed about the metal prices than they should, because they also own, like me, a lot of mining shares. So I'm not going to stand here and tell you, hey, in 6 months I see this, because if you and I had this conversation 6 months ago, I would have tell you, yeah, copper, gold, they're all good. The mining shares are a great buy, and they went lower. But I do feel, and as I've written recently, is sometime between the last couple of weeks and the end of this year, we'll get the complete washout. It may have occurred or it may still need to occur. So if you're investing past trading, I don't have issues with people first stepping up now or adding to what they've already had here, because I think 12 to 24 months from now, we're going to look back and go, wow, same thing that those people look back at uranium now in 2019 and 2020 and go, if I only knew. I feel very confident we're going to say those same things about the golds, the silvers, and the copper stocks, and the zincs, and even lithium now, which has really come back to a level where I think you have to start looking at it again. These are things I all think that for 2024 and beyond, I'm optimistic.
Yeah, it's interesting you bring up lithium and the other battery metals. It has taken quite a hit, and it's come up on my radar again. It's good to hear that you're seeing the same thing.
Well, I don't know if it's that good if we just look at my recent history in that, but I've been around the block, Steve, and I've seen bear markets. This is the worst one. This is worse than when gold went under 300 at the turn of the millennium, because you could understand the shares going down, because how's anybody going to make money with gold at 280? But gold was just 1650 a year ago, and now we're all upset today because it's only 1850. We should only go up $200 every year for the next 5 years. We'd all do pretty good.
Yeah, good point. Okay, let's get into copper. What is your base case for copper?
The downside is we have a much weaker overall economy, both here in the world, and therefore we go sideways to maybe even a little lower for that time frame. But the longer we go sideways and lower, and the continuing lack of real capital going in for new exploration in a market where clearly, if you're going to buy the argument in the world today that we're electrifying and the world has turned and it's moving away, even though it may not go totally away from gas and all, but all this electrification, a good part of it is going to come to us, then the copper is going to be a year or two from now just a phenomenal thing to own. So those that are looking for it now, developing deposits now, or have, they should become more and more looked at and interested in as we get into 2024. So if you can get past trading, and Steve, I have to tell you, when I entered the business almost 40 years ago, all research reports had 3 to 5 year outlooks. At best, the longest anybody looks out now is 12 months. I think we need to kind of shift that back and start to think long term in years again, not months, hours, or days.
Yeah, there is a real piece of that. A lot of the options that are getting traded now expire at the end of the day, so that just kind of gives you an idea how um, uh, how leveraged people are. I'm going to share my screen here real quick. This is courtesy of the Washington Examiner, so thank you to the gentleman there. And this is basically copper and a price action of copper over, what is that, 60 years. And these gray bars right here are recession. So this is what you're talking about, right? If we look at these gray bars and the price of copper, copper rarely does anything but go down during recessions. And that's kind of your little warning here for the near term. If we are going into a recession, copper is likely to get hit. But, we got some pretty awesome V-shaped recoveries here right after the recession. That's what you're
And
talking about?
I also got to keep that up, Steve. If you
Mm-hmm.
look at that since 2000, it's been a series of higher lows,
Yeah.
which is very bullish long term. It's not that big of a turn down now. And the one other fundamental argument, which is more positive now than those recent times, we had ample supply and even oversupply of copper when we turned into those recessions. That's not the case now. So yeah, it's hard to get real bullish when everybody's talking about weakness, and that could, keep it suppressed, so to speak. But when the first real inkling of, wow, things are not as bad as they've been, and we turn up, and more of the electrification argument is being shown and proven out, we're going to need, I'll tell you this much, and there's some very, very good reports that have come out, and not by biased people who just always say the same thing. We have a lot of that in the metals industry. I know people have been telling me about $100 silver for 30, 35 years. They've been saying the same thing. So I don't pay too much attention to them. But some really independent mind thinkings have come out very, very bullish on the long-term prospect for copper. And one of their arguments is this: in order to amply get that supply we're going to need, where we have to go for it and what it's going to cost to get out, we're going to need a copper price above $5 for a lengthy time before any real capex money is being thrown at it. And one last quick thing, Steve, I think is important. Talking to people that attended now the last two big conferences that took place in Colorado, both big worldwide institutionally driven conferences. What I got back singularly the most bullish from myself was how many people told me how the major gold companies were as excited to look for new copper projects as they were gold projects. And I think that's another inkling of what's to come in 2024. So if we can get through this end of the year and, like me, peek out from underneath the desk every once in a while to January 1st, I think we'll be okay when it comes to copper.
Okay, that's good news. Okay, let's touch on Arizona Metals. We know you like this company a lot. This is basically a leveraged play on copper. How did you hear about this project, and what drew you to it?
Well, I like to say that if I only met this man 10 years ago, I probably have been a lot better off, at least financially and mentally. Uh, a gentleman named Michael Gentili. You've had a chance to speak with him. He arrived in the resource industry about 5, 6 years ago after being a money manager for about 20 years in Canada, away from resources, other industries, and has become, I know he probably doesn't like me saying this, but I call him Junior or the next Eric Sprott. But I don't think he'll ever get to that because he's too much of a family man. He would have to devote a lot more time to his work. He's he splits it between being a money manager for a Canadian-based money management firm and handling his own resource investments, including sitting on boards of being strategic advisors. And he actually contacted me when he saw my involvement with a particular company. It was about 5 years ago. We struck up a friendship. The thing that really made our friendship, to be completely candid, is our Catholic Christian faith. And we came really close. We've never met each other. Everything has been Zoom or phones. But he had reached out to me and told me early on that he had made and became the single largest shareholder of this company, Arizona Metals. It was under $1. He explained why he felt that they were onto something. By golly, they hit. The stock ran as high as 7. Uh, I actually sold my original allotment when it got over 2 within 21 days of my purchase. I've been in so many juniors, I lost money that I doubled my money in 3 weeks. I thought I was smart. Well, I actually went back in at almost twice that price because what they started to develop was so much bigger and better than when I got out of the stock. Most people can't do that. It's very hard for people to do that. But I did. And that is really what got me involved with the company. And I think about 1%, based on the outstanding shares, 1% of the outstanding shares, and it's certainly by far the largest holding I ever had in my life. Uh, it was enjoyable, except for the last 12 months. Like everything else, it's come down, but I also got into some, let's just say, some thought deep thinking wording with management about lack of one area that I thought they lacked in. And but overall, I think it's, to me, and that's why I want it this way. It's the single best undeveloped copper gold mine project, at least in North America right now, if not possibly in the world. Certainly in the top 3 or 5 in the world.
Okay, okay. All right, so some company basics. Kim wants us to specify whether we're talking USD or Canadian. We'll just talk USD. Total market cap and cash positions around 200 million, 44 million in cash. That leaves about 150, 160 enterprise value. Total shares outstanding, 116 million, no debt. Management has some skin in the game. They've got about 12%. Nautica wants to know, has management worked with other companies, and how have these companies' stock performed during their tenure?
If memory serves me correct, and at 67, you get to put an asterisk when you talk about your memory. But the bottom line is, I believe they both the executive chairman and the CEO, both were part of another company that they developed. It might have even been in California, but I'm not 100% certain. And they ended up selling that for a nice ticket. And that's when they went out and found these projects and met Michael and some others and went forward with that. So I think I think one's a geologist background, and I think the other one is a finance background.
Okay. And are there any well-known holders or institutions that are shareholders?
Well, in Canada, they're very well held. They probably have, if there's 10 top institutions to own their stock, I think they have 6 or 7 of them. On that end, they've done very well. Where they lack tremendously, and I think I implore them to focus more on that. And I believe even Michael Gentili said that in our last interview, is here in the States. And it's a much bigger market. And I think where they're at now and what they're developing and sitting on, it could be very, very attractive. So, yeah, there's about 6 or 7. They've not been widely followed because it wasn't a company until most recently that they even had a full-time investor relations person. Now, people get upset about that, and I was one of them. But remember, most of the time you get upset at juniors because they over-promote. They said this, it didn't work, it didn't do that. This company did the exact opposite. And you have to give them credit from a project standpoint that they've done everything you would want them to do from developing the project. But like I said, I still think marketing and promotion, which is very important. Can I take a minute on that, Steve, if you don't
Yeah,
mind?
please. That's one of the questions. So that's perfect.
So 10, 20 years ago, most junior companies depended on individual financial advisors for their recognition and developing shareholder following. Whether it was at conferences or meeting them, you would meet a particular financial advisor, broker, whatever we would call back then, and 100 or 300 or 400 of their clients could end up buying that stock. Well, that's a dinosaur now. There's very few financial advisors left anywhere in the world, including North America, that are building book of businesses on individual stocks and charging full commission. It just doesn't work that way. So that is now those same end users, even if that market is still as many people, which I don't think. I believe a small market was even shrunk even more, the junior market, because of cryptocurrencies and a whole other reasons. But now you have to meet those end users almost on a one-to-one basis. So it's much more difficult for a junior marketing company to market. And then it got over-regulated. Down here in the States, you can't even take an unsolicited order on a stock unless it trades on the major NASDAQ or the New York Stock Exchange, even if it has an OTC symbol. So it's very more challenging from the marketing, getting shareholder recognition. And quite frankly, Steve, I would suspect, and believe me, I stepped out of the industry for quite a while. I only put my foot back in a few years ago. I would say there's only as many institutions, people that play this as there was 10 years ago, and maybe even less. So it's a challenge to begin with to get interest. But if you're not pounding the pavement and out there every day, this is what I've always said to companies, and I said it to Arizona too. If you're not out there doing that, companies like you are. So how is a person going to know you? They're only going to know the other company because that's all they're hearing about. So it's mandatory in my book that there be a full-time presence of campaigning and making your awareness of your company. That doesn't mean everything is going to go well, because I own another company where the CEO does promotion 5 star, and his stock is down 75% from the highs. So it doesn't guarantee it, but without it, you're really going to struggle without good promotion.
Okay, I'm trying to think from management's position. They may not even have a real incentive to drive up the share price, because if Michael Gentile is right, they don't need to raise any more cash to finish their project, right? So from their perspective, once they get their feasibility study and metallurgy and all that done, then Barrick or Rio Tinto or someone comes in and they find out what the net present value is, and they write a check. So whether the stock goes from $2 a share and all of a sudden it goes up to 15 and they're bought out, or whether it goes from 5 up to 15 and they're bought out, from their perspective, it wouldn't really matter, would it, if they don't need to raise any more cash?
Mark Twain said, if you always tell the truth, you don't have to remember what you said. So I'm going to tell you the absolute truth as I know it. I believe that's one of the reasons why, until only a few months ago, they didn't have an investor relations person. They did a phenomenal job with their project and raised a ton of money at the right time. And one of the things that I think, if I was them, probably said, listen, what do we need to go out and bang our heads? Let's focus on the project. We got all this money, blah, blah. And their stock was doing well. But when the stock goes down and everybody's banging on you, why are you going down and why are you going down? I think they realized they had to at least step up. But what's real interesting, and one of the many bullish reasons to own this stock, is you're absolutely correct. This company may never have to go to the public market again. They're at the point where, if success continues as we think it's going to, between royalty income, the sale or a spin-off of another project of theirs, and typical bank structuring finance, could finance all what would be needed for what's known as the K deposit now, which already many of us think is somewhere between 15 to 25 million tons. And they only have 113 million shares outstanding. That's why when people say to me, Pete, why do you talk about it being 20? You can't even get back to 4. I say, yeah, right now that's the case, but the avenue is there, and it's not going to take a lot because there's not going to be a need for a lot of dilution. Now, there's things that can go wrong, and this is not on easy street. There's still a lot of issues that can go on. But you're right, that might have been one of the reasons why the company didn't feel it had to do a lot, because it wasn't going to need to go back to the capital market. But in a world where more and more people are more and more short term oriented, people who did buy the stock, and then this down, the worst bear market in 40 years, they were not going to be any exception to it. They went down. The problem then for them was, by not doing the IR, they didn't have a lot of support out there because everybody didn't have anybody to turn to. They turned to me. I've heard from more people that I have no idea who they are, whatever, because if they punch in the company's name, my name comes up because I talked about it. I did videos with Michael and everything and all. And they used to only be able to call the president. Now, they did hire an investor relations person. They did a webinar. They said they were going to do monthly webinars. I suspect in early October, we're going to learn of new webinars and probably news both on another project of theirs, the Sugarloaf, and current drill results. And I think the placement is set now, and those who have an opportunity to either make this their first purchase or add to it, it's at a level now where much of the risk has been weaned out, because we could argue here, Steve, that between what they can get in royalties and what they can get spinning off their other project is the total worth of the market cap right now. So I feel pretty comfortable about, if anybody steps in now and buys the stock, that there isn't a lot of downside risk at this point.
Okay. Um, he's also asking about possible buyouts. So we hit on that a little bit. As far as timeframes, Michael was saying metallurgy by year end. They need to know the recovery rates for each of the 4 different deposits. So each of these 4 deposits has, one's got zinc and silver and the other one's got gold and copper. So they got to do estimates for each one of those. Then they come out with their PEA, preliminary economic assessment, feasibility study, net present value, and then hopefully a target for a buyout in 2024. So they're in Arizona. Jurisdictional risk. Arizona is pretty safe as far as mining is concerned, correct?
Right. People will hop on one company that's had an issue, but it's a unique issue as with copper. I have to tell you, the two best states to look for metals and mining from jurisdiction issues is Nevada and Arizona. And
Okay.
there's a few others, maybe Idaho or Montana, but there's not as much activity there. So I don't. Jurisdiction risk is the least of my worries, particularly since the bulk, I should say, all of their projects are either on private land or BLM land. It's not anywhere near forestry or indigenousness, or there's wild birds or turtles that they can't go near or anything of that nature.
Yeah, yeah. I mean, federal land, I think, is the worst, and then BLM is much better, and then private land is the absolute best, which is where they've got 100 and some odd acres set up for their plant and everything else, and water rights. Okay, Scott asks, many stocks I own give frequent news and updates. We kind of talked on that and how they
What do you ask?
basically, that they haven't been kicking out news like some of the other companies that he owns. But
Can I just give in defense of them?
yeah,
Because we were we were both management and I were unprofessional. We'll leave it at that. Uh, in defense of that is a year or two ago we were drilling just nirvana into. We knew we hit it big there, and we had six or I don't know how many drills were going at one time. But in recent times, we only start to explore in an area that's never had exploration with no more than two drills, and it's really naked drawing. This has never been out there before. So you just don't pop a hole and go, wow, eureka. And the other little drilling that's being done on SK, I'm sorry, SK. Where am I? I'm in British Columbia. On the K deposit is very shallow drilling they're doing now because it's going to help bring in a few more tons into this project. So you're just not going to have as turnover on actual drill results and fairness to them. But again, I just think this. If you just look at the interview I did with Michael Gentili, who is their single best asset, not only is he their largest single shareholder, but having Michael Gentili telling your story and he's not charging you for it, I don't know how you don't want to have that used every day. Here, Mike, here's a jet. Go down to this place. Go say, talk to these institutions for me in Boston, New York, or whatever. But the bottom line is, I think in fairness to them, and that's why I'm very optimistic that in October, we're going to see more and more news flow and more news to justify this bull's position. So I would tell Scott, whatever's happened in the past, hopefully over the next 30 to 60 days, you're going to see a significant change in the way that the company communicates to the public.
okay, this is from their recent presentation here. So this is the K mine over here on the right, and this is the one that you were talking about where they're just drilling like there's no tomorrow with 6 drills. Now they've got 2 drills out hitting these ones. So there's just less volume, less news to share, correct?
Yeah, they're not even, to mess my knowledge, there's not even at the central right now. They're finishing up in the western, and what I think
Okay.
they're doing, and this is just my speculation, this doesn't come from Michael or anything, this is just my own, is they've gotten sniffs. They had great samples from surface. Remember, this is an area that never had really any drilling at all. And the way they approach it, and this is the skillfulness of them, is they're going to probably sit back. They have an extremely well-known advisor whose VMS experience is second to none, and they're probably going to look at that data. They're doing some geophysics and all, and that's will decide where they move to their other targets. But in the meantime, they're moving closer to an initial resource on the K deposit by hopefully early next year. And also, we're going to hear about the Sugarloaf, which suddenly, for people like myself, a year or two, we never even thought of the Sugarloaf. We knew it existed out there. It had 1.5 million ounces of gold, and maybe someday we do it. But now there's a real argument that they could be anywhere from 5 to 7 to 10 million ounces there. And we're going to learn more about that in the coming weeks. That's why the story is more compelling today than any other day that I've been involved in it.
Okay. That one's kind of getting thrown in and we get it for free. Okay.
Nothing's free in life, Steve.
Discount. It's on a discount. How's that?
Discount. Okay.
Okay. Mutiny. My concern with every over-the-counter stock is their history of pumping and dumping. Is there a risk of that with this?
Well, this is one company you don't have to worry about pumping and dumping because they don't pump. And if you don't pump, you can't dump. And to be fair with them, to the best of my knowledge, whenever they first bought their stock, since I've been involved in them, they did sell a portion of, not a large portion, when the stock was up at 650, and probably reinvested about a third or maybe even up to a half of that back after they sold that. So this is not anything remotely close to a pump and dump. And understand this, they have an OTC symbol. They do trade down here, but primarily the trading has been in Canada. But if and when they do more marketing in the US, and as we notice in recent times, in the last few weeks, there's been more volume in the US, I think that is happening, and therefore, hopefully, we'll see more activity in the US market.
Okay. Let's see. Ahmed, is there an issue with permitting for the company? He referenced the other company you were talking about. Can that be a risk for Arizona Metals?
Well, you never say never, but like we just noted before, they're in some very good spots. They seem to have a extremely good working relationship with the local town, with the local government. It's apparently a very pro-conservative mining area. And so right now there's nothing to say that there's anything on the horizon that could cause that.
Okay. All right. And then just curious wants to know, could Arizona Metals lose out to the timing? For example, continued pessimism and drawdown in junior mining sector overall for another 6 months or so. Maybe a reduction in copper prices owing to global recession. We hit on that a little bit, but maybe you can. The thing I see is that if Michael's right and they're able to pull this stuff out of the ground for $1 a pound, and right now the copper price is like $3.70, even if that goes down to like $2.50, which I don't think it will, but maybe I'm wrong, they're still profitable, right?
Yeah, again, nothing is totally insulated, but I believe, and of course I'm betting a large sum of money on it, uh, that as we go further here and the recognition of how big this already is, and to understand what we're speaking about has been on less than 5% of the entire area that they can work on. In fact, Michael's favorite geologist went out with him in his trip. And while he was out there, he identified just by looks 14 targets that they weren't even considering targets. So whoever, and obviously I say whoever because I don't believe this is a company that's going to take this into production if it ever gets to that level on their own. They'll be, say, long gone, but they'll be moved on to and brought a major in or whatever the case may be. And so I'm not too worried about fluctuations. Listen, if the whole world caves and copper falls to $2 or the Dow crashes 50% and stays down, people that own Dow stocks are probably going to also own Arizona metals, and it could become a liquidation issue then. But outside of those issues, I don't see any reason to think there's a substantial further decline in this stock. In fact, I'm growing more optimistic, especially since it's trading now in the last few days the way I hoped it would. Decline, build a little bill, and moving back up. I think we've seen the lows in the stock. But I
Yeah,
also root.
I
But I
think so
also
too.
rooted for the Jets. So look what happened.
I got to say, you called it with the stock price. So you put out a tweet saying that, oh, it gets pretty stretched up here.
Yeah.
And sure
Well, you
enough,
know
the
what's
next day it
interesting
corrected down.
when you decline, Steve, like it did, it rallied back to what used to be support, and almost always they turn back from that, which did. It filled that back nicely, and today, as we speak, and I don't know what it did because we started before the close, but it was working its way back higher again. That's why I think that recent low around 180 US, I think that was the low for this stock.
I think so too. I had limit orders at $1.80, $1.70, $1.60, $1.50, and I think
Guaranteed bottom. You should have told me that. It would have went in at
those are pipe
181.
dreams at this point. Okay, last one. Having nothing to do with metals. John wants to know what city in Croatia are you from?
Oh, well, I'm not from Croatia, but the name Grandich is Croatian. My grandfather, my dad's father, obviously, was born and raised in. There's many islands off Croatia, and this particular one is Silba, Silba. Someday I hope to get there, but for now, I view it on the internet.
Look at it on a map. All right. And if anyone wants to get a hold of you for business planning, retirement planning, estate planning, exit strategy planning, what's the best way to do that?
Hating me for talking about juniors 6 and 12 months ago, all that's included. Uh, Twit it. I can't call it X, Steve. I just
I
can't
can't
call
either.
it X. I'm going to call it Twitter. I can't call it anything else. But tweeting has become something I've enjoyed, a great way to communicate. So tweeting is what I do most. The second most is my blog, which is at petergrandich.com. And then YouTube, I also obviously put interviews like yours up. I've interviewed you and others that way. I also still interview some sports friends from my previous sports business. So I would say tweet first, blog second, YouTube third.
Okay, we will put links to all three of them down in the show notes. Peter, thank you very much for coming on the show. You have a great rest of the day, sir.
Thank you for having me, Steve.
And thank you for tuning in. Support the show, hit the like, subscribe, and share this with anyone that you think needs to hear it.